Hi everyone. Today, obviously, markets continued to be an absolute dumpster fire, down 5.8% for the S&Ps. You can see in terms of areas, we are back here to this zone from April of 24. We've had a huge move. We said yesterday that if we took out the low here from September, you could see there was very little volume up until here. And then we cut through most of that volume, so we're going to have to see where the next kind of volume zone is. You can see it kind of softens up through here, and then the next zone is all the way down in the 474, 475 area. But let's take a quick look at the charts as we head into the weekend. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got China retaliating with their own tariffs. You got Vietnam reducing their trade obstructions, so you got one country already coming to the table. I don't think anybody expected Vietnam to hold out, but we got one coming to the table. Hopefully this leads to many, many more, and then we have markets continuing to melt down, obviously. So the China announcement was another 34% on US goods. European stocks falling 2% in tandem with US stocks. Jerome Powell came out and spoke today saying that the tariffs would raise inflation and potentially lower growth as well, which is a terrible situation for the FOMC that puts them in a bind. Are they going to continue to lean towards the cut side, or are they going to continue to pause because of that potential inflation? And we did get a couple of big banks coming out and saying that we are likely to see a recession, greater than 50% now, uncomfortably high percentages in terms of a chance of a recession. So not super great on all of those things, and that is a major reason that markets are selling off, not just the tariffs, but the potential for a incoming recession. Moving over to fear and greed. Fear and greed is at a 4. This is absolutely as low as I've seen it. I don't even know if we got that low during COVID, so very, very interesting. Huge sells here. I remember when we were back in this consolidation looking for the 125 and thinking that that was pretty far away from where we are, and look at where we are now, way, way below that 125. Strength down in the dumps at almost a minus 5%. Breadth as low as it goes. We'll look at that later. Put call ratio spiking almost to the 1, just short of the 1, and then you got volatility getting all the way into the 45 area, way higher than we kind of expected in the short term. Safe haven demand, extreme fear, junk bonds spiking here, extreme fear on every metric still, just like we were yesterday. Looking at the economic calendar here just for a moment, non-farm payrolls came in really, really good. 228, almost double the number expected there, but we did get the unemployment rate stepping up to 4.2. I thought the forecast was 4.2, and that would have been in line with forecast, which is what I expected to see either way. So a slight step up there, not a major move. We've kind of been oscillating in this kind of 4 to 4.2 area for a couple of months at this point, so I don't think it's a big indicator, at least for me. And these non-farm numbers look really, really good. So overall, like all of that, unemployment, meh. Good jobs numbers. And for me, that means the economy is not quite headed into recession the way everyone seems to fear that it might be, at least for now. Then moving over to the charts, obviously, like we saw, huge down move, almost 6%, taking us back to this consolidation from April. The low of that consolidation is the 495.73 level. You can see it marked here. Little bit of interaction with it back in February of 24, but really April of 24 is that zone, and I would expect to at least get to there. You do have kind of an intermediate bottom at the 500 level, big psychological level of 500, taking you back to this structure here. All of the short-term structures don't really mean anything because it was straight down all day. Huge volume. Look at that volume, 217 million on the volume. Massive, massive volume. We haven't seen volume that high potentially ever, maybe going all the way back to COVID potentially, but either way, huge sells, big waterfall, back-to-back days of around that 5% yesterday, and then almost 6% here today. So actually accelerating to the downside. And then we'll see if that big 500 consolidation, kind of 495 to 500 zone holds that big psychological level as we head into the Monday. Moving over to the Tasty charts, we said this 144 area was the next zone of support if we did break that 89 EMA, which was at 531. The next one is right there at that kind of 501 area, 501.33 for this week. That's the zone. Again, that's only $4 lower, a little bit less than 1%. We went down $30 on the day. So if we go down another 4, touch the level, maybe we find some support in there. Obviously, everything is still bearish. Momentum bearish, huge volume sells. Right now, your trailing stop is at 594.85. We're going to see if that zone shows, but that's the area we're looking at, 501.33. Moving over to the NASDAQ here, you can see the NASDAQ was also down 6.2%, so just over that 6% level. Went right to the low back here from 5 August. That was the zone that we expected if this September area broke. And again, that's the same zone that we were in April of 24. So we're seeing a lot of confluence in that area. If this zone breaks, the next real consolidation is this back here. You had a really short-term consolidation in December of 23. That would take you kind of towards that psychological maybe 393 to 405 area, somewhere in here maybe. But right now, this is the critical zone. Is this zone going to hold, or are we just going to continue to go straight down massively? For the NASDAQ, that was down 5.3 and then 6.2% back to back. Volume there, 117 million. So huge volume. And then looking at the volume profile, you can see that kind of consolidation here around that 400 level. That would be the next zone. That is another 5% down from here. Are we going to go there in one day? That would be massive. The RSI is already oversold on the daily chart, but again, when you get these kind of fundamental shifts, you could absolutely see it continue like we're seeing right now. So that's the next zone. This is where we're at, waiting to see if we cut through here or not. Then moving over to the Tasty charts here for the Qs, you can see that 144 EMA, the same one we were talking about on the SPY charts. That's at 421.12. We'll see if that zone ends up holding or not. Momentum, again, still very bearish. Volume, huge volume on the selling. Bearish conditions. Your trailing stop right now is the 517.76 area, but we're all the way back to this low here from August. You can see that same area. Is this 144 going to hold? We're obviously well below that lowest ATR band, so definitely extended in the short term. Are we going to see at least a little bit of pullback in time? Potentially something to look for next week. Moving over to the Russell and the Dow. The Russell actually found a little bit of support at this major trend line. We talked about this trend line being really important in that 181 area, the 179 to 183 zone. That was the trend line. And we did finish pretty decently off of the lows. The low was all the way down here around 176.70. We bounced and finished right on that trend line. Really interesting to see that. Really, this was the only one that was finding support here today, finishing in the middle of the candle. Everything else was at the low of the session, low of the candle, just like the Dow was here today. But the Russell finding a little bit of support. Obviously, it has fallen the most by far from the most recent highs. We're down about a quarter, 26% or so, somewhere in there. To the lows, however, we were in here around 27.8% lower. So interesting. Russell finding a little bit of bounce, and then the Dow cutting through a bunch of levels as we would expect, down about 5.5%. Your next level would be 382.20 right here at the lows from this same zone in August, same consolidation that we've been talking about. Moving over to Apple and Microsoft. Apple was down 7.29% after being down 9.25% the previous day. Microsoft down 3.5%. So continues to outperform a little bit, obviously less exposure to these tariffs. But in terms of trend lines, we cut through the trend line, cut through the level 360. So your next one is 352. And in terms of zones, that takes you back to this consolidation low. We're right at it, right at those wick lows from this December of 23 area. So we'll see if that zone is important. If it falls through there, then we're looking back to this kind of consolidation range here, 330 up to this kind of 334 area. We'll see if that zone holds up or not. And then looking at Apple a little bit closer here, it's right at the trend line, almost to the penny right there. So we'll see if that zone holds or not. Again, in terms of price action, we're back into this consolidation from January of last year. So round trip, the whole year's worth of move. And off of the highs at this point, pretty down, obviously 27.5% or so. Moving over to staples and discretionaries, you got an everything sell here today. They fell almost the exact same percentages, 4.34 and 4.31%. I think this is more indicative of that recessionary call that we got out of the banks. If it was just tariffs, I think staples would be okay. It was positive yesterday, didn't really care about that. But then we got Jerome Powell talking today. We talked about those bank forecasts of potential recessions, and even staples are not immune to potential recession. So you're seeing that come in here. And then discretionaries, same thesis, cut through all these levels. You're back into this consolidation low from August. The next level for me is 180.10. Moving over to breadth. Breadth is down a lot. It was down 80% for the 20-day, 63, almost 64% for the 50-day. We're getting into those really, really low levels where you just really struggle to continue to fall. So we're already at just about as low as it goes on 20-day breadth. You don't see these numbers nearly ever. You can see back here, April of 24, again, December of 24, so twice in that year. We saw it again here, October of 23. Before that was back here in March of 23. So about twice a year, we see these really, really low levels. This is the first of 2025. And at this point, your next level is 4.5. Does it get much lower than this really ever? Not really, right? This is about as low as it goes. You can see back here, September of 22, we got to this 2.3 area. Same thing back here, June of 22, we did get there. But since then, we really haven't been that low. So critical zone here. Is this going to be kind of a bottoming in here? Possibly. And then looking at 50-day, not quite the same thesis. You really rarely get here to the 10 area back here, September, October of 23. That was a critical bottom. We rallied for a long time from there. We did get a touch bounce retest continuation, so maybe we see something like that. Otherwise, your next area is 2.75. The last time we saw that was back here, October of 22. So can go lower, sure. Does it go lower than this often? No, not really. Moving over to JNK and TLT. JNK water falling off 1.5%. This looks bad. Obviously, this is on the news of the recession calls. It hasn't cratered too bad. We're back to the zone we saw April of 24. We did have a nice rally. Structurally broke here on the daily chart. But government bonds continue to do really, really well. Pretty clear left shoulder head, right shoulder now. This looks like this is going to go for a while. I think it's going to go at least to the 100 area, potentially to this trend line in here. That would be interesting, closer to this maybe 101, 102.5 area. Either way, TLT, one of the best trades on the board. Moving over to volatility. Volatility spiked to 45.3. We closed on the high. Again, does it go this high often? Not really. That August low took us to a 65. That's about as high as it goes. Before that, you have to go all the way back here to February of 20. So you're talking COVID times is the last time we were there. And realistically, I was surprised to see this go to a 65. It did gap down and fall pretty aggressive, but I don't know if that was necessarily warranted. But we're getting close to it now. Do we get here often? Not at all. The VIX did signal much lower lows to come, and it sure did follow through, but is this kind of a culmination point? I think you could argue we're close, maybe a couple days away, maybe we bottom, at least for the short term, either early or mid next week. Moving over to my accounts, I didn't do anything all day. I just wanted to stay out of the markets after the previous day where I lost quite a bit of money. Wasn't really in a good place to trade. I didn't want to watch it too closely, and markets just continued to sell off all session. And then right at the end of the session, I did throw a position on here, 399 puts, so more than $20 lower for $2 credit. So the buy price would actually be 397. If we fall another 5% in 3 days, that would be absolutely insane, but at this point, I think we're going to find at least a little bit of support. This just feels really, really dramatic. I do think it's oversold. Obviously, I've been saying for a long time, markets are expensive. So I think that's playing a huge role. You do have some recessionary calls like we talked about, but I just don't believe we're going to go back to back to back 5 to 6% days on the NASDAQ. So we'll see if it pans out. If we start to break some levels, I'll definitely take these off. But I think we're low enough where some of these prices are getting pretty reasonable, especially relative to where we've been. We were up in the 500s not that long ago, and now we're looking at 399 on the board with a decent credit. Let me know down in the comments section what you think of these prices. What do you think of this price action? Can we continue to just sell off super aggressive, or are we going to bottom? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.